Welcome to KTM Investing. Today, we are going to cover how to profit from the trade war, and why, as an investor, you should be following the money and not the political noise. China's economy is surging. The first quarter of 2025 delivered a stunning 5.4% GDP growth, well ahead of expectations. This wasn't just a rebound, it was a statement. Retail sales jumped 5.9% in March, the strongest in over a year. Industrial output surged 7.7%. Nuclear energy production, up over 20%. This isn't happening in isolation. From deepened ties in Africa to strategic deals across Malaysia, Kazakhstan, and the Caribbean, China is quietly building a global coalition of cooperation, trade, and shared development. President Xi Jinping's 2025 diplomatic tour has already included major agreements with Cambodia and Malaysia, reaffirming partnerships through infrastructure trade and technology. Malaysia has welcomed Chinese investment in 5G semiconductors, railways, and supply chains. China is expanding globally while the United States engages in escalating tariff threats. As Washington imposes up to 245% tariffs on Chinese goods, Beijing answers with deeper multilateral trade ties. China is not isolating, it's integrating, and that integration is accelerating economic momentum, especially in high-tech manufacturing and electric vehicles. This is where it matters for you as an investor. A rising GDP, expansive policy support, and trade diversification mean one thing: the Chinese EV sector is poised for explosive, sustained growth. Companies like NIO, XPENG, Li Auto, and battery giant CATL are not only central to China's domestic plan to replace 323 million gas vehicles by 2035, they are now integral to its global export machine. Tesla, with its gigafactory in Shanghai, is deeply embedded in this movement. Volkswagen is betting heavily too, with localized EV platforms designed for China's tech-savvy consumers. Remember, all Chinese automakers are now legally required to produce a portion of their fleet as electric vehicles. This isn't optional, it's government policy, and with fiscal and monetary policy tailwinds, the scale of production is set to expand massively. But here's what's really driving investor confidence. China isn't just selling electric vehicles, it's building the roads, charging networks, and battery factories of the future, and bringing along friendly companies and nations who see what having 1.4 billion customers would mean to any global business who wants to maximize their potential. While the United States grapples with political gridlock and protectionist trade wars, China is laying the tracks for decades of uninterrupted tech-enabled growth and producing 2 million US dollar millionaires per year versus 500,000 millionaires per year. As an investor, you can totally take part in this. You can participate in the boom ether with individual stocks, or you can also participate with a safer approach through diversified China-focused ETFs like KGRN, BAT, MQI, CARS, and CQQQ. These funds include top holdings in Tesla China, BYD, CATL, XPENG, and other breakout players. China's 2025 growth story is not a blip. It's a blueprint. And while global headlines focus on tension, investors should focus on fundamentals and focus on growing wealth. China's growth is one of the biggest wealth-creating opportunities we have seen in recent history, so ignore the politics and start making money. This is KTM Investing. Thank you for watching. If you enjoy our content, please consider subscribing now to track the real trends shaping tomorrow's markets.